So what are opportunity zones and why are they important? They're one of the most exciting developments for new real estate investors in decades, certainly in my career in real estate. Broadly speaking, it was a program that was created by 2017 tax reform and is now slowly being implemented into practice. It creates a set of powerful tax incentives for individual investors, family offices, and small institutions to take their unrealized capital gains and invest them into real estate, particularly into historically underinvested areas. This is significant in part because there are over $6 trillion of unrealized capital gains in the market. And if this program can tap into even a fraction of that, this will be one of the largest economic development programs in history. So the question that's probably on your mind if you're a potential investor into opportunity zones and opportunity funds is, what exactly are these tax incentives and how do they apply to me? We think of them as having three core tax incentives. DRE, defer, reduce, eliminate. The deferral is about taking existing gains from a recent sale. It could be stocks, it could be other property, really almost any kind of investment qualifies. If you take those gains and you roll them into an opportunity fund, then you defer paying the capital gains tax until 2027. So really a long period of deferral, and that allows you to invest substantially higher amount of money at the beginning of the program rather than paying tax and reducing less. The second benefit, reduction, is if you hold the investment for at least 7 years, then you can take that tax bill that you owe in 2027 and actually reduce that by as much as 15%. The final benefit, which is probably the most important one, is the ability to pay as little as zero in capital gains on the opportunity zone investment itself. So if you hold the fund investment for at least 10 years, whatever kind of appreciation occurs during that term, hopefully substantial, you will pay no new capital gains tax on that. So taken together, this really has an extremely beneficial effect on ROI and equity multiple. So for investors who are interested in real estate anyway, who have gains in, say, their stock portfolio that they may want to move into a different part of the market, they really should be looking at this program as a unique way of getting into real estate and realizing some really unprecedented tax benefits.